Oh man,
Nick, happy Friday. What's up,
happy
dude?
Friday. It's good to have you back on the show, hanging out with us, taking a look at charts as always. A little bit of a pullback here, and I was making my joke again yesterday, Chris, about Nvidia and having to tap the screen to make sure it's real because Nvidia was down. Well, it's down another 3% today. It was down 4% yesterday, and dragging the market down a little bit with it.
Yes,
I say dragging, but it's not much of a pullback yet. I mean. I'm curious your thoughts on this, whether or not this has the room to become something more, or is this
sure.
just another blip before another rally higher? What are your thoughts?
Well, yes. I mean, I look back to what we did with this previous sell-off in March. I mean, that was a pretty substantial sell-off. There were some inside candles there. We double topped and then sold off through the April move. I do think that this puts a little bit of a pause on the rally.
Mhm.
Obviously, if it rips higher, then that is to me like the blow off top. Where once that, okay, let's take this in two scenarios. One is if we go bearish day yesterday, indecision today, and next week or even early trading next week, we come right back up with a rip to the upside. Either that double top holds, or if this thing goes higher, then we're talking just straight up capitulation. Look, it'd be nice to be long with a move to the upside, but that would to me come a little bit more crash worthy back to the downside. So let's see if we have a bit of a reality check. Right now, there is some responsibility of Nvidia to not be a crazy, ridiculous stock because it is now like jostling between like 1, 2, and 3 in the world, right? Microsoft, Apple, Nvidia, they've been all over the place the last couple of weeks of which one has the largest market cap. And so, I mean, if Nvidia is going to be traded like a meme stock, that has a lot of repercussions for the markets when it comes to just overall volatility. So I think putting a pause in this rally would be a good thing. I think as we go into Q2, there might be some heavy profit taking. And I think that's what really this week looked like is we just had some profit taking on these large tech stocks. I mean, Apple's had a big rip, Nvidia's up and could do no wrong. We see a lot of stocks and sectors sitting near these all-time highs or very close to it with overbought conditions. So I'm just curious if we have some heavy profit taking today. I had a silly assignment on my SPY. I had an iron condor that was assigned, even though today is the expiration. They decided to assign me the day of expiration. So I'm watching the SPY closely. I do have some levels that would be noteworthy. So my SPY today, if we see a directional push, we just kind of tap these intraday lows from yesterday. This was yesterday's low, and we're just sitting right around that. Directionally, if we can push and get a fresh break below, let's say 543, that opens up the move towards 540. This is the biggest level that I'm watching on the day. So if we see a bearish push, 540 is my target. If we hold these lows from yesterday, then we look at a gap fill and there's really no harm, no foul. But today, I think there's like 5.6 billion, or it can't be trillion. I would say maybe it is trillion. This was a market watch indicator. Yeah, $6 trillion in options due today. So we had AM, we have aftermarket expirations, S&P, NDX. So basically your Nasdaq, your Russell, your S&P, tons and tons of dollars expiring this morning and this afternoon at closing bell. Again, that should mean volatility, but I don't always love zero DT trades. So Nvidia is definitely the tell. Yesterday, the market sold off. Why? Nvidia was down, Apple was down, Microsoft was down. We have said this for weeks now. If you have your largest companies with the highest concentration in the markets, if they fall, if they decline, if they're red, the whole market's going with them. So I don't know, Nick. I'd like to see Nvidia head a little bit lower. I'd like a reality check to some of these rallies. I'd like to try to buy a dip if I can. You just got to wonder if maybe the gap fill from last week is the target. Maybe that's all the market gives us is a little correction towards 536, 537 on the SPY. What do you see price wise?
Yeah, no, I think it's possible in terms of the concept that Frank and I were talking about this morning is these little pullbacks on the SPX. I've got to pull it up. Have been so aggressively bought that
Yes.
the follow through was so impressive. Like every time you'd get these big pushes lower, a long wick would form, and then a follow through push to the upside would occur. Long
It's true.
wicks on the bottom, and then follow through moves to the upside. Long wicks, follow through. So I'm just waiting and seeing what happens today, because if we get a
Yeah.
close today that looks red, I mean, even yesterday's SPX candle here was a close that looked, it was more red than not, but you can see it closed in like the the lower third of the candle itself, the full, range. But from a candle perspective, I would be hesitant to think it's going to follow through anywhere to the downside unless you finally get a day in which you close near the lows. Now, one thing you could mention is that Nvidia actually did close near its low yesterday. In fact, you can see there's the close on yesterday's candle. Nice little strong red body candle. Actually held some of its bearish gains, and then gap down here this morning. Again, I think if you're going to see a follow through move, keep an eye on Nvidia, keep an eye on the SPX, and if you get a bearish close, then I would say that the likelihood is very much that okay, now a red candle close at the end of the day, psychologically that would do to a lot of people, it would say like, oh wait, you know, where's the buyers? The market didn't immediately snap it back into, positive territory for the day. And if
Right.
that sort of settles in, if you get a rebalance where, markets can go down and that realization comes into the the picture again, I think it's very possible that we see a move down to like 53.25 on the SPX or, the other mention I would say about the indices specifically is we just tapped 20,000 on the NASDAQ here. The NAS 100 hit 20,000 on the dot. That's a huge psychological level there. And so hitting that 20,000 mark could be a short term, kind of checkpoint where, the bulls take a break. I think it's very, even if you're very bullish on this market, it's very okay to think like, hey, we've had a really good run here. It's maybe due for a little bit of a reality check, just to remind everyone that there are reasons that stocks can go down, that things can, there's a bear case somewhere. And right now the bear case has been hiding for a little while. And whenever that happens, I get a little bit nervous about staying overly bullish on stocks.
Sure. Well, let me ask you this. Was your portfolio overall yesterday positive? Did you actually have a P&L up yesterday considering the market sold off? The
I did.
NASDAQ was down about 0.8%. The SPY was down about 0.3, 0.4%. You did or did not?
I did, and it was really nice
Did. Okay.
because I
Yeah.
only have 4 positions right now, Chris. My positions are so simple. I've got TLT longs, gold longs, S&P and XLK, but I've got covered calls sold on those. So
Okay.
those are well, in the money at this point, which is not ideal, but they're netting each other out pretty much on the days. So the returns on my index holdings are offset, and then on gold yesterday was positive. Today's, giving back a lot of those gains. I do
Yeah.
have a position on that. If we break this level of
Oof.
support, which very well could happen here, I'll get stopped out. But huge sell off on gold this morning. Same thing with silver, down 3%. What are
Yep.
your thoughts on the metals?
Yeah, well, I was asking about the P&L for the overall portfolio because I as well. I mean, it's funny because Monday I was
Hmm.
red on the day and the market was up, and then this week it's actually net
Yep,
P&L
same.
was positive despite the sell-off. So that shows me that I'm pretty well positioned for if we do have a downturn. I've got some good cushioning to the downside. I'm playing some of the downside, but I think that the technicals I'm looking at right now. I mean, I would like to see the pressure remain to the downside. I'd like to see it play out today. See if there's a decent direction. It's like if we don't have any direction today, then it was all Monday, which is to me really stupid. But what do I know? But on the weekly charts, this could be setting up for a nice little evening star. If we have a long wick to the north, I've been talking about this the last couple of days. If this pressure puts a little bit more, let's say this green candle is just a sliver of green or even turns red. To me, that's a nice indecision candle to then lead for some follow through going into next week expiration, which is also a quarterly expiration. So if we have an evening star on the SPY weekly, if we have an evening star on the Qs weekly, this looks really good to me that the market can finally show a bit of a turn and put some pressure to the downside. And like I said, I hope it continues today just because we have so much expiring and most of the time options close out of the money. I saw that the call option volume sentiment is like 11-1. So you guys can see that on the edge finder. Like it's so bullish right now that I'd almost like to see those buyers be razzed a little bit, On the metals, yes, like you said, big sell-off, but I think that it's still the same consolidation that we've talked about. Big indecision candle for the weekly gold move, big sell-off on the day, but this doesn't really change anything on gold for me. This is still the same kind of broadening pattern look, where I'm just going to watch kind of levels like that. We could come and test certain levels, maybe test 2270 to the downside. But if the bulls step in there, I think that's a good opportunity. I did put a bunch of collars on yesterday, which is I buy a put for any protection to the downside, and I sell a call and I finance that, so it doesn't cost me anything. If I get called away on the upside, it's profitable, but I still have downside protection. I thought that was an important thing too. But again, any stocks that I own, I want to make sure that I'm at least protected both ways. So gold, it doesn't really change anything unless we breach 2270. Otherwise, that's a level of support. Silver, you had mentioned this on the stream. I don't know if it was when I was with you on Monday or it was the time last week. We were looking at that trend line on silver right there. So this trend line is holding, and I'm just waiting to see if the bulls will step back in and get us into some, some nice confirmation buy territory. Hopefully take this up towards 35, 36. But, again, you got to watch and see how does price play out here. If we breach this trend line, are we going to come back and retest 26 on silver before we get an up move? I still like silver better than gold, but if we're just correcting, we're just not getting the big confirmation I want to see. Buyers to me would be emerging there. If we're really going to see silver head up, maybe outperform gold again for another stretch, that's my silver trade. Gold, I'm just going to wait, let it play out. I wanted to ask you about crypto. Are you following Bitcoin prices at all?
No, not well. A little bit. I've kept an eye on it, just out of curiosity. I don't have any positions on it, but I have, I've heard the on social media just the people talking about how bad the altcoin world is, and which is not something I really follow closely, but it made me think like, man, if altcoins are bad right now and Bitcoin is still near the all-time highs, altcoins can get a whole lot worse if Bitcoin struggles. But anyways, in terms of Bitcoin specifically, I have been talking about I want to build a position on Bitcoin over time, not a big one, but some Bitcoin exposure would be great. I've been watching like the 60,000 level. I might pick up some longer term positions on it, but we'll see. What are your thoughts on it?
Well, I have these these two chart alarms, which is really all I'm watching. So I mean, I think it's still range bound. I had said this morning that if we get between like a 60K and a 56K, that is the window that the bulls better step up their game. If the bulls are absent and we get a breach below 56 and 55 and this thing doesn't rip back to the upside, what I'm looking for is if we have a bear trap, let's say the price is just kind of slowly meandering lower and we get to this like 56K mark, if the bulls don't snap this thing back up, I am a little worried about, how much lower this thing goes, because there are some pockets and demand levels down here. We have previous highs, but if we take out a majority of this rally, that does make it pretty vulnerable. But until that happens, right now, this is a strong support level. We could slowly come down to there to build up that demand right around that 60K to 56K level. If we come back up to the highs again, you're just looking at a range, right? A range trade on Bitcoin. I would like to think that this thing, and it's been weird. I mean, the Qs have made several all-time highs this year. I mean, I want to say the NASDAQ, I know, or the SPY, I want to say it's notched like 30 to 31 all-time highs this year. The Qs, I'd have to double check how many all-time highs we've hit, but it's had to be something comparable to that. We probably had like close to 30 or 30 plus highs on the NASDAQ this year. But if the Qs are making higher highs, or maybe it requires the markets to make all-time highs again, will Bitcoin get some love in 2024? Obviously, we don't know. But I don't think that if the market is down, that we're expecting to see all-time highs in Bitcoin, right? It's like, I think we have to have the whole enchilada going up for Bitcoin to make all-time highs, right?
Yep.
Dollar's getting stronger, Bitcoin's down, dollar's up, gold's down. I mean, the dollar is pretty strong. And to me, this is the first time that we've finally breached the level I've been talking about, which is 105.60. I still want to see how the day closes. I still want to see how the week closes. And of all the dollar crosses, Nick, my favorite one, and the only one that I'm actually in for this dollar strength, well, not only one, I shorted the euro dollar this week. That was a fresh trade. That's the new trade. I'm shorting on the euro dollar because it's the heaviest weight in the dollar basket. And I'm still long dollar CAD, and I'm still long dollar Swiss. I'm not in any of the currency pairs. The Aussie dollar is a trash position right now. When you look at the charts, it's sideways. New Zealand dollar, same way. Pound dollar, same way. Dollar yen, not touching it. But everyone should be watching that 160 level, because the dollar yen has been pushing up the last few days, and we're coming right back in towards that 160 intervention high. So we have this is 1, 2, 3, 4, 5, 6, 7 bullish candles in a row. If we come back and retest 160, you're probably going to poke the intervention button by the BOJ. If they do, that's going to show how powerful that 160 level is. If they don't, and we break 160, Then there's another, annoyingly higher leg where the JPY just stays weaker and there's nothing you can do about it outside of enjoy the carry trade. That's it. So
Yep.
got to watch that
Yep.
160 level.
That's a good point. And Chris, I wanted to also, I was scribbling when you were talking about Bitcoin a second ago. Just I wanted to show you this horrible drawing that I made. The yellow is this is my thought on it, is like stocks. So stocks, and
Okay.
the blue is Bitcoin. So I think similar to, you could also draw one more in here, which I'm going to call the A for ARK Fund. So you've got the S&P 500. I think if the S&P
Yep.
500 is trending higher for a while, it takes some time before the risk curve to catch up to the super high risk stuff like Bitcoin and
Right.
ARK. So if we're
Right.
looking at like this scenario, if you actually see the stock market like start to go, really parabolic, like everything starts to rally, that's where
Mhm.
those things I think would like really outperform and like launch past the S&P 500, is if the, unprofitable tech companies start popping into everyone's, mail
Correct.
inbox, and everyone's buying them and rushing into things like that. I think
Yep.
Bitcoin lives in the same neighborhood as like
Yeah.
ARK stocks, like unprofitable, high, beta, high risk, high return kind of stocks. So I don't know. I just thought I would mention that. If people are wondering why is it Bitcoin doing way more, it's because yes, this bull market is a bull market right now, but it's kind of a hated and narrow bull market. It is not a very
Dude,
loved, spread out. Everyone's feeling the
narrow.
joy.
Narrow
It's
is
very
like all
narrow.
capital letters, dude.
Yeah, very, very narrow. So,
Yeah.
with that said,
It's
Chris, I'm gonna back out. I want to. Did you have one more thing you want to say? I didn't mean to cut you off.
no, I mean, to your point, like,
Yeah.
I mean, I've been trading for a long time, right? I mean, I thought Mag 7 was narrow. This is Fab 3. This is the
Yeah.
trifecta. Like, come on, man. This is ridiculous to see
Very,
so many
very
stocks
narrow.
underperforming and being carried at these levels, and also seeing the divergence between the Dow and the Russell versus the S&P and the Qs. And look, if you're long the SPY, you're long the Qs, you're basically long the same stocks. If you're long
Yeah.
tech, you're long the
Yeah.
same stocks. Like, it's all very, very concentrated, which can still run.
Yep.
I listened to some content, read some reports this week. I mean, I've seen both cases where there's a lot of things to be cautious about, blah blah blah. But I've also read a scenario where there's so much that the market is going to look past that we might just continue to rip higher and higher and higher because fiscal policy is still fairly loose, right? Fiscal
Mhm.
policy, not monetary. Monetary policy. I mean, I looked at this morning, Nick. The Fed is still by the watch tool still expected to cut in September. Now, the
Yep.
Fed keeps saying they don't want to cut, they won't cut. We need to see inflation data. We'll see a round of inflation in July for June's print. We'll see a round of inflation in August for July's print, and another one for August and September. So we still have 3 months of waiting to see what the Fed's going to do, what the Fed's going to say. Watch this CME watch tool jump around for the next 3 months until there's something actionable, good or bad. And
Yep.
and it's going to be annoying, but I want to know, like, can the market move without three stocks driving it, and can the market move without the Fed? And if it doesn't, then that's the current deal that we're in. Is like maybe we just see some sideways price action, but you never know. I don't know.
Yeah, no, I mean, it definitely feels like this market is very much all in on a couple names, and
Yep.
it's really carrying the whole thing. So I've got Frank. He's going to be joining the show here just behind me. I'm going to step out. I got to do a podcast with the Market Insights Market Pulse podcast. It's my
Perfect.
contributions. But with that said, Chris, thank you for coming on the show here. You can take over with Frank for a moment. Guys, if you're watching with us live, make sure if you're on Twitter, it's at Real Chris Pulver. You can find Chris, keep up to date with him. And also at the same time, he's got his own YouTube channel. We'll be dropping the link to that if you're watching with us here live on YouTube. Make sure to go follow him, subscribe, find his content there. And Chris and Frank, you guys got the show from here. We'll be right back with both of them. We'll set up the cameras, get you guys going just after this quick break.
Thanks, Nick.
Yep. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hey Chris, how's it going?
Frank, happy Friday, man. How are you?
Pretty good. How are you? Happy
Pretty
Friday.
good. Happy Friday, dude. I could not have asked for Friday to come any sooner than it did. This has been an incredibly long week, not from trading, from other stuff. I had a live session this morning. I've also been, my little side hustle has taken on a whole new demand this week with junior golf camps in the evening. So
Right.
it was controlled chaos all week with kids from 5 to 10 years old. Everyone had fun. It cost me an arm, a leg, and ice cream and snacks all week, but it was a lot of fun. So I'm just happy that it's over. Get a little chance to decompress for a few days and then tackle it next week as well. But markets wise, it's been nice to
Very
see some
busy
P&L
week.
to the upside, despite the market being a little bit indecisive. I'm watching today on the SPY. I keep mentioning this. If we're going to have some direction, I like the 540 level on the SPY. I was going to take a long strangle today or a long strangle for Monday, but it was going to cost me about $3 in change. And I thought, well, what would it look like if I just went out to Friday? It only cost me like $2 more to go out to Friday. So I have a trade right now on the SPY that is a 545 by 555. That's on the upside, and a 544 by 530 on the downside. So I'm looking to see if, we had triple witching today. We have quarterly expirations next Friday, the 28th, to finish up the week in the quarter. And so I'm trying to get a little bit of volatility. This only cost me about $5.70. If we have an average move, what just happened there? 544. Did they just fill me? Son of a biscuit. Well,
You just took a trade?
I guess that trade worked out. Well, so I didn't put in what trade just got filled. This just got a bunch of buying power back. Let me check the SPY. Must have been filled 544.35. Okay. So this would have been all right. That's fine. I'm just going to put this in for the same thing. So I was assigned on the iron condor that I had in the SPY. This one was showing a bit of a margin call, so I had to get out of the SPY position. I have to do the same thing here. So let me do a quick maintenance check on this one. So this SPY, I have the shares. I still have my long call. If I close this out, let me see. Let me see if I can get like 544. Let me see if I just get 544 and close it with the combo. So we're 543 and change.
This is your strangle, you're saying?
No, it was an iron condor that got assigned. So I'm fine now. Basically what happened was I had an iron condor on the SPY. My bull put side was way in profit. It was way down here at like 480 by 475. But then I had a 542 by 547. So clearly the calls were tested. And the dumb thing is today was expiration, and the broker decided to assign me. So I got assigned on the position. It doesn't matter. I still have a defined risk on the trade. It was like a $4 risk on the trade. So that's my net loss. What I was kind of hoping for though is that price would push lower, because I was assigned at 542. If price did push down in the day below 542, then I turned that assignment into actually profit, and then I still have my bull put spread that's in profit as well. But anyway, I took a small loss on the trade. Ended up taking about a $2 loss on this side. Took my profit, but net should be like maybe a $3, $4 loss net. That's all. So anyway, it's fine. But the good thing is now, buying power wise, everything's back where it needs to be. Every account's back up with lots of option and stock buying power, and that's exactly where I want it. So overall, I mean, even though the day is kind of indecisive, yesterday was down. I was up 12K yesterday. Today I'm up about $4,000 and still watching. So it is what it is, and going to see what happens for the rest of the week. I did make a kind of this executive decision on the SPY as I'm tracking it. If we see a decent sized sell-off, I'm not looking to get super greedy on the SPY. If I get back up here to some fresh highs at 15 or 16 bucks, I have a call option that should be worth maybe $1 or $2. I'm going to take the profit and run. I also, this week, on all of my own positions, I have some type of protection. On the I got assigned on CV, or I took the assignment on CVS, and price today, if it stays above $60, which looks pretty promising, I get the stock called away for about $6 a share. Chewy, I put in a covered call at 27.50. Baidu was the one that really needed the most help. I put in a collar position on Baidu. What that means is I have a covered call that I sold, but I also have a long put in case this one wants to head a little bit lower. So I like Baidu. I like Alibaba. I still keep talking about these China stocks that nobody seems to like. And, I mean, fundamentally, these are, this is big tech. These are cash cows, but they're just not getting a lot of love with a lack of follow through in China. So I still like this potential double bottom area around $80 on Baidu. I still like the potential look of a double bottom. I mean, again, this would be Baba not cooperating, but if we came back down to like $70 or even tested this, this would have been a 2022 low around $64, $63. I'm still long in these positions overall, but it's going to take time. Clearly, the one thing we're seeing is U.S. market has made all-time highs. China has not. Japan has not. Europe has not. That's the weird part. We have U.S. outperforming on the coattails of 3 stocks. We have underperformance for the most part of the higher percentile of stocks are underperforming. It's a very, very narrow, very thin market rally, and you just got to wonder how much longer can that continue. If we don't have a broad market participation, you got to wonder. Somebody posted this earlier with this blackout period. Yeah, Jamie posted this. Enter a blackout period for the market coming into earnings. Do you think there'll be a good chance for a pullback? I mean, it would make some sense that we have some profit taking going into Q2. We have a little bit of this window where there's not a lot of earnings plays, and this is all, just kind of summer trading as we head into maybe a more important Q3 with the Fed in September. So I would like to see a pullback, and technically it would make some sense. But again, you just have to wonder, like, how aggressive does an NVIDIA sell-off get? How aggressive does an Apple or Microsoft sell-off get? If you had to pick, Frank, volatility-wise, would you rather be, long, short, NVIDIA, Apple, Microsoft? If you had to pick one of those 3, like, what's your big horse in the race? What's your secretariat? Any of those 3?
If I were to be short, is what you're saying?
No, if you had to pick a direction, and I guess longer term you're probably going to pick bullish, but it's like if you wanted to be bullish right now, which one would you take for upside potential, but also least amount of drawdown? What would be your pick of those 3?
I mean, I don't know. I don't know if that's a fair question because NVIDIA is a good pick, but it has probably the max risk of drawdown out of those 3.
Agree.
Short term, we're still in that uptrend. Nothing is broken. The S&P pulled back. We hit our targets for this month, which was 5,500, and
Yep.
what we saw then was just a small pullback. I think this is just profit taking. I don't think this is telling us anything really. I think like in a week from now, we can look at NVIDIA's chart and see it back up to like where it was. I think it was like 130, 140. So really nothing.
Yeah, peaked around
major
140
yet.
and change. Yeah.
Yeah, so I do like NVIDIA, but I don't want to buy it right now.
So you're long
I
NVIDIA?
don't want to buy anything. What did you say?
Yeah. Well, I said, so you're choosing NVIDIA. I mean, I have a ratio spread on NVIDIA. I'd love to get assigned on NVIDIA. My assignment price would be, I have a 95 by 80 ratio spread because as soon as this thing split, I put that trade on. And so, I mean, we'd have to have a catastrophic correction for me to get assigned. But if I did own the shares, I would get assigned at $80 with a $15 buffer. I would own NVIDIA at $65, which obviously that'd be very welcome considering we're just at 140.
Right here,
what's that?
Where NVIDIA is now at 125. You could say you do like an iron condor play, because next week it's either going to be back up at the highs or this correction is going to continue. So I think, give it like 15,
let's look
20
at it.
point run. Next week, I'm pretty sure price is not going to be anywhere near here.
So let's go NVIDIA. Yeah, no, you make a good point. Let's go out to. I guess we can see. So next week is quarterly expiration. It's a weekly expiration on Friday for NVIDIA. Let's go out 7 days. Let's see what this is going to cost us. The nice thing is because of the split, we have decent liquidity. There's obviously tons of volume in this stock. IV is 65. Expected move is about $8. Let me see what a daily, weekly expected move is. So we have a weekly at 1068. Well, that could be. I mean, this could be pretty cheap, dude. If I did a 126 by 125. So you're paying for all the expected move. That is for sure. To the downside, maybe a 115. To the upside, maybe a 136. Maybe we give ourselves back to the highs at 140. And then the lows, I mean, if I'm going to go up $14 that way, I might as well go down to $14 this way. Try it, make it kind of equidistant. So I could pay $6.69 for a stock that, if we have enough volatility, either one, retest the high, which would be a $16 move, or two, drops back into maybe a $10 move. So I think, Frank, you just talked me into a trade, dude. So you're better at doing that than most. Usually I don't I don't listen to anybody. No, that's a good point though, because it's way more affordable with dollar spreads to hopefully see some direction here. So I'm going to take a trade here for about $6.70. I'd like to see if Nvidia has like a 10 plus dollar move. If it does, this is going out to next week. It's not that expensive. I'll go ahead and take this trade. Let me go like 675 or less. And that should be, I mean, maybe it can at least sneak like a safe dollar in this trade. But if I can get more, that'd be pretty sweet. So I'm going to try to go, let me go like 670, see if I get filled on this trade. 670, we're at 125.20. I could make this a little bit cheaper if I go 124 right there. But I'll keep it pretty close. Yeah, we're looking about at the same price between the put and the call, same price. So I'm going to go 670 or less on the trade, and everyone's going to get some love on this trade, dude. Frank, good trade, man. I like this. I'm gonna take it.
Well, don't thank me yet.
Well,
I don't know where it's going to go.
Don't thank me yet, he says. Spoken like a trader. All right, let me go. I'm going to replace this one. I'll go 675. Point is, I like the trade. I'll take it. So,
but let me tell you some reasoning behind this too. Is that this pullback is among several pullbacks we've seen where the market looks like it's going to retrace and then it rips higher. So I'm saying either in the next week, the S&P is going to come back up to where it was, or even higher, which is past 5,500. I think we hit 55.1. But if it breaks that, that's a good sign for the upside. But if it breaks this trend line that we're on now, which is a pretty major support level, I can see a volatility taking us lower to a farther out support level, which will probably make that move work out too. So if you're looking at a $6 move on Nvidia, which is essentially the S&P right now, I think it's reasonable.
Yeah, I do too. I'm going to go out to the 28th. I'm doing a 126 by 140, and I'm doing a 125 by 111. So I'm looking at $14 of upside for a trade that cost me about $6.76. And the expected move, just based on the IV rank, is about 770. So if we hit that or exceed that, great. If I get an expected move on the nose, I get about $1 profit. $1 profit of a 676 debit. So 1 divided by 6.76. I'm looking up like spot on with that 15% take profit. I really like these trades where I can get 15 to 25%. If we have a big move one way or the other, even better. I'm giving myself a little bit more upside where I could get, for a trade that cost me $6.76, I get $14 a max, which means my upside is about $7.14. So, or I'm sorry, $7.24. So I do like the trade. Yeah, I mean, it's a good trade. The other trade, like I said, I'm doing a ratio spread all the way down here. The odds of getting filled there are slim to none. But if we have high volatility on Nvidia, for better for worse, that's a good thing, because I'm just looking to see over next week if we have a little bit of follow through on this bearishness. If we do, great. If it comes back, like you said, and rips back to retest the highs at 140, that's a $14 to $15 move. That is more than enough to pay for the cost of that debit and give me probably $5 or $6 in net profit. So
now the question is, do you think that's going to happen in 1 week?
Well, that's the trade I took, so let's hope it does. I mean, because the other trade is I could go out 30 to 45 days and play, the longer term trade, but it's just gonna cost me way more. Yeah, I'll pay a lot more if I did the same trade. Let me do it. So let's go, Nvidia. Let's go out instead of trading for next week. Let's go out
let's think about it too. You're paying 6 something for this move. The average weekly move is 10, you said, right?
That is correct. Yep.
So if we hit like 4 or 5 points up or down Monday or Tuesday,
Hmm.
I think you're gonna see some profit at least
Maybe.
early on in the week.
If I match, if we get like a $5 or $6 move with the intrinsic value, I know, and look, a week is not a ton of intrinsic value, so the time is not going to be great, but it will be enough to probably see, I'd say 50 cents or $1 profit. And I might just take it, right? I might just take it if it's immediately paying me on Monday. I might just take the profit. I could also recenter it, go out not just to next week, but the week after, and do the same thing. Now let's see what that trade would have cost me if I went out like 42 days. I would do a 120. I'm just going to do a 126 even. And now the implied volatility is around $17. You're paying $17.80. So you're getting all of that priced into it. And if I went out, 40 days, obviously I'm paying a lot for that. Now to the upside, maybe if I'm going to pay for, $20, I'm going to sell. So it's 17 and change on the expected move. I'd probably do a 146. So I get, $3 on a 146 and then a I guess it'd be a 106. And so I can take what is a $17 debit, pay $12.80, $12.90 for it. Same type of thing. If we see a $13 or $14 or $15 move out of Nvidia over the next 40 days, you and I both know that's extremely possible. For the sake of this trade, I'm going to mirror this trade with just a bigger window. So I'm going to take the same trade on Nvidia and do the same thing out 42 days. So I'm going to an August 2nd. Let me make sure there's no overlap with some of these positions. Nvidia, I know I have my ratio spread that's out to June 28th is what is this? 111, 125. Oh, that must be my ratio spread there. And then, so also after the 10-for-1 split, I had a bunch of broken wing butterflies that were put in and recalculated. So all these like 65 and 65 and 64s, those are broken wing butterflies that'll be probably profitable by today. So this will clear up for a lot of profit. Let me figure out what this one is. So I have a 95 by 80. That is my ratio spread. And then I have a 1. Oh, I'm so stupid. It's right here, dude. This is the trade I just took. Next week. This is the trade that I just took right there for $6.76. So that's the trade I need to watch. I'm going to go out to what was my position here? 42 days is an August 2nd. I'm going to take the same trade here, Frank. I'm going to see if I can get $12.95 or less. Okay, $12.95 less on the debit, and I'm just going to put everybody in this trade. So this gets some. Not filling at $12.95, huh? You sneaky dog. All right. Mid price is $12.92. So I don't want to pay more than $13. I'm going to go $12.99. Final offer, says Drew Carey. Fill the $12.99. All right, similar order. Let me get this in. So $12.99, 9732.
That's not bad. Paying
It's not bad.
$5 more for way more time.
Correct. Not bad at all. Actually, it's actually I'm happy with that fill. And surprisingly, it's not a ripoff. Probably the ripoff would be just buying calls, even though that could be one directional, that could pay really well. But I want to play both sides and expect to see some volatility. So hopefully that is the case. And let me just get a couple more fills in here. So 9151.
When's our next big news event for the U.S.? Next week's going to be kind of quiet.
Yeah, I think we're going to have some pretty quiet trading. Make sure these all got filled. That's filled at $12.95. Filled at $12.99. Okay. Filled at $12.99. Filled at $12.99. I think these are all filled at the price that I wanted. So $12.99. I was hoping for a slightly better debit fill, but it is what it is. All right, $12.99 on that trade. All right, dude. So I'm going out. This is another Nvidia trade. This one is out to August 2nd. August 2nd expiration, and that contract size should not be 3, whatever account that shows. That's not right. Nvidia. Okay, those are all 1s. That just was a misprint. So the trade is 8-2 expiration, 126 by 146. And I have symmetry there where it's a 126 by 106. So I'm going after a $12.99 debit for a $20 max profit. and expected move would be 17. I think it was 1770 was my expected move. You know, the weekly ATR is almost $10 and change, so like almost $11. I mean, heck, if we have one good directional day with intrinsic value on that trade, I'll probably get that thing to pay me, hopefully break even or better. But I mean, obviously, I'd like to see a $15 move with some time left in that trade could probably get me up to profit. But I just want to see a big fat move on Nvidia, one way or the other, dude. So
Yeah.
let's see what we do. So far, actually, a trade that I looked at this week. I don't know if I talked about this on the show. I think I did on the zero DTE strangle. Let me show you what this one did today. So I'm pretty sure it's positive already. SPX trade. It was a zero DTE, so it would have been this afternoon. The center trade was 54.70, so it was a sell leg at 5,500 and a sell leg at 54.35. And then I did 20 points wide on that, so 55.20 and 54.15. Oops, that's a buy trade. So right now, this trade was trading earlier this morning at 305. It's already down to $1.75. So my profit target was hit. That's a win for $45. That's a win. And then what I'm tracking as well is by the end of the day, does this actually reach full profit? So if price truly stays inside where it's, it's below the 5,500 and it's above the 54.35, then that's full profit. And that's $3.05 on the day. So, I mean, this is a study that I was really interested in for some active zero DTE, a trade that, look, it's been an hour and 20 minutes through opening bell and you're already hitting your 15% take profit. And this one's actually decayed enough that you're up around $1.30.
Wait, so instead of selling a strangle, you're selling an iron condor or something?
It's a synthetic strangle. So because this is the SPX, which is obviously a very expensive instrument. I can't just do a strangle on this without costing me $100 grand. So this is, I go wide on the iron condor. So it treats the sell legs a lot like a strangle, but I obviously have defined risk. So max risk on the trade is $1,800. That would be if price blew through one of my levels. But the idea is you take the trade, get enough credit up front, try to go after a very aggressive take profit at 15 to 20%. And get out.
How much did you pay again or how much credit were you?
Yeah, 305 collected.
Okay,
and
nice.
Yep. So I mean, again, if you didn't do anything, you've got an hour and 20 minutes into the trade, and it's already up at $130. So you have $3 of max profit with all the risk to the end of the day. Or I mean, if you're $1.30 into a $3 move, you're up 42.6% on the position within the first hour and 20 minutes. Not a bad trade. So yeah. I'm tracking this. This is something I want to kind of prove, proof of strategy, proof of concept, and make sure that these, what these windows are for me is if I'm going to start taking this trade myself personally and do this thing, kind of every day, I'm looking at this kind of, by 9:45 or 10 o'clock Eastern time, placing the trade, staying somewhat centered, letting the market be, noisy, choppy, not a lot of movement for maybe 30 to 60 minutes, and having this trade hit that 15% take profit and be done trading by like 11 or 12 p.m. Eastern time. So by noon, it's like, I want to be out of this trade. And maybe my hard stop loss would be by noon, if this thing's not profitable, just getting out of it. Maybe. Yeah. And because you're so much more vulnerable in zero TTE. If you go all the way to the end of the day, the deltas, the gammas, the thetas, it's way more sensitive. And they move so fast that if you're on the wrong side of the move, you're toast. You can't do anything. There's no plan B in a zero DT environment. So that being said, if you have all the value up front with that time, and that time decay is very quick in the first couple of hours of trading, that to me is a really easy way to grab like those very aggressive take profits. So, in hindsight, it's like, oh, it's great if you hold it all the way to expiration. But the point is just take the profit, be done, take it the next day. You're only trading like a 2.5 to 3 hour window at most. And I've seen a lot of these trades, Frank, by, 1040, by 1050, by, 11 o'clock, this trade is done and already giving you like a 15 to 20% take profit on your position. So just
you're taking this trade at 9:30.
Yeah, I'm waiting like until like 9:45, 10 o'clock, because the first reaction of like a gap open gap, it's just really noisy. And so if you wanted to center it right at opening bell, it can be a little choppy. So I kind of let the first like 5 to 15 minutes play out and then put it in, still grab a decent amount of credit for it, and then see price kind of chop around a little bit. If that's what it does and it chops around for 60 minutes, I've seen this trade pay out. Right now I've been tracking this since last week. So 1, 2, 3, 4, 5. It's 4 out of 5. since last week. We didn't have a trading on a Wednesday, obviously. So I started talking about this, nerding out of this last week, diving into the study itself. And now I'm looking to trade it, for real. But I want to get, maybe 50 trades logged, maybe 100 trades logged, and just see what the windows are looking like, and then kind of build my own, rule set around it. So this could be something that, we talk about a lot more as far as just daily activity. So I would like it. Let's see if it does its thing.
Yeah.
But so far, so good. I mean, this trade's already done. You're done trading. There's your, 40, 50 bucks on the day. Bye-bye. Treat yourself to a nice breakfast.
Zero DT does seem like a good way to go when you're in an environment like this where things aren't really moving.
Sure.
I mean, aside from yesterday and today, but for the most part, if you go to the 5-minute time frame,
Yep.
these are not great moves. These are very small. So if you can make a narrow window and still collect a good bit.
Yeah. Well, even yesterday from opening bell, like this move right here was enough to get you 15%. That choppy move in the first hour of trading, that got you 15%. Even in the afternoon, if you took the trade again and recentered it, it finished right where it started. So I mean, there were probably 2 trades yesterday you could have taken it and had this thing pay out. So again, there's a lot of sensitivity to zero DTE. There's a ton of risk. It's exponentially more risky than going out like 30 to 45 to 60 days. But the validity and the efficiency of the options market is still the same. Yes, there's more risk because you're so much more sensitive on those Greeks, but it works the same way from start to finish. And the one thing that's on your side as an option seller is the theta decay is so much faster from like that first chunk of the day. Like if you take the day and cut in opening bell to closing bell into thirds, you have a really big chunk of theta decay that first third of the day. And that's exactly what this trade profits from, is just getting in, being somewhat directionally neutral. Price doesn't go anywhere for maybe 60 minutes. And that's enough to grab a quick profit and reduce the volatility in the trade. So again, I'm interested in some more data. Like, the study was done by Tasty Trade, and they were talking about taking this all the way to expiration or all the way to end of day. And if you hit your take profit, obviously you take profit. But if you don't hit your take profit, I want to know what the average loss was, because if you take the trade and lose, you can lose the full boat at $1,800 and you're walking away with, $50 profit. So to take 30 days to make up your profit is going to suck. But the reality is you're rarely going to lose the full $1,800. So that's why you want to be quick. You want to be aggressive. And like I said, I might, if I start taking this trade live in my accounts, I think the trade is going to be by noon. I'm just done regardless. I don't care if it's a winner or loser. It's like I got to be out by noon because it gets way more vulnerable to the risk side late in the afternoon. Just my thoughts.
Right.
So we could talk more about that if you're interested. It's an easy trade. You if you can trade SPX, can you trade futures in your Webull account? You can, right?
Right. Yeah, I can.
So you could trade SPX. It's an index trade. So SPX, NDX, you could trade that. They're cash settled. So anyway, it's good for taxes. And you're automatically given like a 60-40 split if you trade the index futures or index options. And, there's no risk of assignment, which is nice. So,
I could try it for like one trade a week or something.
That's true.
But I couldn't do it every single day.
Oh, yeah, that's true.
I took one for one DT, so I could hold on to it for one day and close out next morning or something.
Okay. But, which on that note, I mean, I can look and see. I mean, I don't know, maybe obviously instead of taking the trade, like I'm gonna keep building like the kind of hypothetical, right? I'm gonna test it every day. If I've got a 90+% win rate, that's good, that's valid. But I'm also looking to see by what time is this trade done. Like right now it's 10:50, the trade's done. So I've already tracked it on my spreadsheet. So this is done by 10. Let's see, $1.30. So $1.70 debit by 10:50 a.m. Eastern time. And then so the trade's in, the trade's a win. That's we're batting about 80% right now since last week. And I'll keep tracking this, and I have a feeling this is, I mean, Tasty Trade did a study. It was a 94% win rate. I know that gets a lot of traders excited, but you have to understand there is risk in the trade. And so I don't like the idea of holding it all the way to expiration. I like the idea of this trade is good for maybe the first 2 to 2.5 hours of trading from 9:30 to noon, and just call it what it is. It's a winning day. It's a losing day, but be done with it. Because if you get out by noon, you still have some time left to not lose everything on the trade. But you might take a couple $100 loss, and you're going to have a backwards or an unfavorable reward to risk, but a little bit. But
Yeah, as long
I
as you're
did the
you're
numbers. Go
watching
ahead.
it.
What's that?
As long as you're very quick and you're watching it,
Yeah.
then you should be fine because then you wouldn't have to realize a full loss or I guess you wouldn't really want to wait till expiration, but you could realize a full win. But I think you're right and just getting out when you're up. You
Yep.
collected almost 50% because you paid $3. So you paid it. You collected $1.30.
Yep.
So close enough, but like that's for one day. So you do that
For
every
sure.
day. That's really good. I'm on the other hand, options are not that expensive right now. I'm looking at
It's true.
SPY and
Mhm.
wondering, how many times could you just buy a call at the start of the day or at the end of the trading day and see it open higher or see the end of the day move to a higher price.
Right.
So if you buy like an in the money call, they're usually like zero DTs, probably $1 something. 2 days or one day out is either $1 something or $2.
Yep.
So if you do that, if you buy a call, um, how much more expensive could it get, and what are the odds that price moves higher? That's what I'm kind of looking at because it is risk defined. It's just a simple trade. It's just buying calls and puts if you're looking to the downside, but puts are more expensive than calls right now, which is
I know they are.
kind of interesting. But
Yep. There's
I'm
definitely some
looking
put
at
skew.
SPY, and we saw it gap lower. I'm like, I mean, what are the odds it comes back and fills the gap? I think
32%. I can tell you.
we have a pretty good chance of seeing that happen. Um, and then I don't know, just kind of playing these short term plays, just because we don't really necessarily know the direction other than in this market we're in a huge uptrend.
Yep.
So until something breaks, the trend is likely to continue. Um, let's look for upside and
Yeah.
let's make it short term because I don't think this run is sustainable, but I don't necessarily think it's going to crack in the next 15 minutes or 3 days or whatever. So that's just my outlook right now. I think I'm just looking at buying calls and just seeing where if they end up working out.
Yeah, and I mean, look, if you have a plan and you stick to that plan, you have a methodology. Also, the one thing you're doing with just your little strategy of just focusing on buys only is right now you maybe saw me like write this on the chart, 54% to 46%. Right now, going back 70 years, the market already has in a baked in 54% bullish bias. In an uptrend, it's even higher. I mean, I don't know the exact number, but I know it's greater than 54% because if all you did was focus on longs this year, every single day or every couple of days, this market wants to grind higher. And day after day or week after week, it's trying to stretch. And so the last couple of weeks, I think what's been, I mean, to me, it's like I can always have something to complain about if I want to, but we've only had like one directional day that drives the market. So this week it was, freaking Monday was a
Yeah,
directional day.
Monday.
Tuesday was nothing. Wednesday was not a trading day. Thursday was like a retest of Monday's breakout because I think that was an inefficient day. Like that was a weird directional move that it's like Monday's direction. Again, my opinion should have been last week's volatility. The fact that the market did jack squat after CPI, even during FOMC, and it's like nothing happened. And then Monday the market decides to rip. And I don't know if it's because it's a holiday disruption. It just starts to hit, stretch and hit that 550 level. You and I talked about 550 to 545, or I'm sorry, 550 to 555, and we hit 550 on the nose, and we've turned a little bit off that. So I think right now 550 might be a bit of a pause point. But is the market satisfied with a correction of around 1.3%?
Probably.
Maybe.
I
I mean,
think
we have
for
seen 1 to
now,
2% be plenty. 1 to 2% is plenty for these bulls to just step back in and just buy everything.
yeah. And I just looking back on the past several months, every time we see a pullback like this, there are talks of is the market going to correct? And then it doesn't. It just comes
Right.
back up. So I think when people say they want to wait for lower prices, this
Might
might
not get it.
be the only chance they get on lower prices for a while.
True.
Every time you see a pullback, and although it's not ideal, it's just the way things are right now. We've seen the past 4 or 5 months every time the market dips. And you can see, like, on your chart right now, on that daily chart, it's
Uh-huh.
happened twice before this time. I believe that was April, and then one in May, and then this month. It seemed like a steep drop, but it's just another pullback. So
Yep.
instead of
I
getting
do not
fearful right here, why not
disagree.
just buy?
Yeah, I don't disagree. And when you said, nothing is broken, you're totally right, man. I mean, we've talked about this for the last couple of weeks. If nothing is breaking, if this bull trend is intact, if this trend line is intact, look, we could have price go nowhere, right? We could have price go sideways before we officially were to break a trend line. We could even have price correct a little bit deeper than what it's already doing right now for that 1.3%, and then still have a buy on the dip with the trend line support. So to me, this market would have to, you know, really wake up the bears to say, okay, this is a legit sell-off, because what we did last time is we just got up to this crazy extension, went sideways, finally had a breakdown candle that was enough momentum to drive it lower for the month, right? So
Yeah.
that just is nowhere to be seen on the chart. Like, one little red day does not make a bear market, right? One day does not make a trend. And so I mean, obviously I'm paying attention on the daily time frame. If we struggle to break the highs and we go sideways, if we struggle to break 550, fine, but we can go sideways and still have this be intact, and a breakout is still available, or the bears would have to step up and actually show confirmation. That's one thing we're missing, Frank, is we're not getting strong, obvious bear confirmation. Traders right now that are trying to be short are calling the top, and that has not worked at all, right? I was wrong for a month. I was wrong for a month calling the top. But the nice thing is my trades do this. Here's my position. If it goes up, I make money. If it goes down, I make money. I was okay. But when I was short, I was still doing the exact same trade, and I was making money on the downside versus the upside, you know? So I just think right now it's like it's the same trade. It's just what can wake up the market for a bigger move one way or the other. But if we go sideways, I'm going to take that 0DT stuff I'm talking about. It's like, if it works for the first 60 to 90 minutes of trading, that's an easy $50. If I just do one contract, it's not that much risk. It's manageable. It doesn't cost me a lot of money. It's way cheaper than just doing a strangle where it costs me $100,000 on the SPX. So I can tie up $1,800 and just piecemeal maybe $300, $400, $500 a week together. It's not bad. That adds up
And
pretty
yeah,
nicely.
if we see today that this candle does not really move and it's already recovered most of its losses from today,
Mm-hmm.
if we see that sort of sell-off just sizzle out, I mean, I don't really see a reason why it wouldn't go back to the highs. So
Agree. And yeah, I mean, let's look at this. For the last, we've had a pretty good run here. I'm not going to lie. Let's go to like a 30-minute chart. So for the last 1, 2, 3, 4, 5, 6, 7, 8, looks like 9 weeks, Frank, we have 8 out of 9 bullish weeks. That's a pretty good run. Let me check that on. So this is always my 5-minute chart here. Let's go back to the actual weekly chart. Is that right? 8 out of 9 weeks on the week. Yep.
so why not
So
just
since
buy
April,
like
1, 2, 3, 4, 5. We had an indecision. So 1, 2, 3, 4, 5, 6, 7, 8, 9. We've had 7 out of 9 weeks bullish.
just buy 1 week out then, or buy at the start of the week, and 8 out of 9
Well,
times
look,
you're
you have the bias to the upside. Like, so are you saying that your side you're just going to trade? You're going to trade just the upside. You want to focus on the trend, the direction. You want the path of least resistance. Makes perfect sense. Okay.
for now, yes.
I'm a little bit more hedged. I'm looking for smaller take profits. If I get, if I pay $5 for a debit and I can close it out at 6 or 6.50, I'm going to take the profit. Yes, I'd love to see the market, drop and tank and make me $10, $15, $20 and have unlimited profit potential. But for me, profit is profit. If I grab 15 to 25% each and every time, high probabilities, lower the volatility of my portfolio, trade both directions. I like that. I like that every couple of weeks I'm still making money, whether the market's up or down. I like the fact that we had a sell-off this week on Thursday and my portfolio is up. I like the fact that I've got protection if the market decides not to cooperate. So that's my job, is to make sure that I'm not surprised by anything. We go up, good, I'll make money. We go down, good. We go sideways, I've got other things working, So, and there's all sorts of ways to trade it, obviously, but I don't know, man. That's just my approach. I also listened to a really interesting podcast on the road this week, and this guy was just talking about simplicity in general. And he was a big, like, just indexing type guy, but a traditional 60-40, or working with people that maybe you want more risk, you do like an 80-20 or 75-25. but really just sticking to the plan of buy the haystack, buy the whole market. He's like, whether you take, fish from this sector or fish from this sector, it's like they're all swimming upstream or they're all swimming downstream in case, I guess in a bull market, they're all swimming downstream. But he's like, if you buy everything, which is basically the S&P, and that's kind of your balance, or you buy the whole stock market. Like I know Nick has like the VOO, or you can buy the VTI. I mean, there's all sorts of ways to trade the whole market or the entire global market. That would be like your, 65 to 75% allocation to equities. If you want, if you want bond exposure. I mean, I don't know about you, man. As a trader, I don't really care about bond exposure. I truly don't, because I think bonds, even in a good market, are going to underperform. I could be wrong, and the bond market might make this crazy rip, but I just don't see the appeal of a bond market when I could just go out and park a certificate of deposit and park a money market instrument for 5.25%, 5.5%. That's better than bonds, in my opinion, where you have, you got to wait for maturity on a bonds, and the price could actually dip because yields are still questionable whether they go higher. So, I mean, if anybody is, I don't want to take any risk. A money market instrument is still attractive at 4.5 to 5.5%, whatever you can get out there. I would just say make sure you're going with a too big to fail type bank, so you're not worried about any type of regional bank crisis. Or that'd be the one thing I'm worried about. When that happened to Silicon Valley, I was like, just be careful of what banks you're doing CDs with. That's all.
I'm not that strongly biased towards having diversity. I think what I like is focusing on what you like to trade, focusing on what one thing you like to invest in, or a few things.
Mm-hmm.
I like keeping the basket small and focusing
Yeah.
on something that you really do believe in. And there's so many currency pairs, so many stocks and indices. I think just focus on what and what you've been doing, and what makes sense to you, and going from there, because you don't have to make money by doing a million things. You can,
Right.
and people are really good at it, but I like the simpler approach of just finding that one thing. And so that's more so where I am. I don't invest in a bunch of stuff. I just I focus on one thing, and that's about it.
Yeah, I agree. I think, look, being concentrated is not a bad thing. Obviously, for those that are concentrated in NVIDIA, it's a great thing. If that, I would look, I was pretty bullish on. I still am. I mean, Amazon has been one of my big reasons that my accounts are up, 30, 40% the last couple of years, because I put together, like, I took about a 10% stake in Amazon. It's been up a lot. I've traded a lot of options around it to kind of increase my gains and juice my leverage a little bit. But I don't have a lot of stocks that I own. I trade a lot of indexes. I trade a lot of options. I'm diversified with those options. But as far as what I own, I like you and I talked this week on Chewy, right? I'm still in my Chewy position, which I have a covered call at 27.50. And part of me, since our conversation, I'm like, you know what? I don't really want to get called away at 27.50. But if it does get called away, I'll make like $10 a share, roughly. If it doesn't get called away, then I'll just add another covered call. And I want to try to keep it, like lower delta, like 15, 20 delta. So that way, if it's going to get tested, we're getting tested with a bullish move, as opposed to a repair trade. Like CVS, for example, I bought CVS when we had a crazy earnings gap to the downside. And all I had was, well, since 2013, since 2019, since 2020, this is a stock that actually, just like we saw back in 2020, 2021, if you have these crazy discounts, I mean, this was a stock that hasn't been this low since 2020, which hasn't been this low since 2013. I thought, well, we could probably go up. So I bought some shares. I put on a covered call. I got it out of the way, and I'm flipping this for like $6 like today. If it stays above $60, I flip this. It's taken me maybe, let me see what I bought the shares. It shows May 1st. So May 1st now, I've held the shares for about a month and a half, and flip it for $500 or $600 a share. Like, that's not a bad racket. Make $500 or $600.
No,
And if I can find,
trade.
it's like if I find 10, 20 stocks a year that do that, it helps me make an extra $5,000 or $10,000. That it's adding 3, 4, 5% to my bottom lines. Like, that's good, man. I can do that all day. So again, it depends. Like, I don't want to own everything and anything, but what I do own, I do have some conviction around. And I'm curious where things go. So a lot of options, not a lot of ownership, but what I do own, I try to, repair aggressively, or I try to lower the cost basis aggressively. So when it does turn into profit, it's bigger than what the market gives me. If there's a $4 to $5 move in the market, I'm hoping I can grab a net like $6, $7, $8 of profit. And if it's a bigger move, great. I mean, like Nvidia, for example, if I took ownership of Nvidia, dude, I'd try to make, $50 to $100 a share on Nvidia. I'd be willing to go out and just stay out of the way, roll my calls, and just stay out of the way. But if it goes up aggressively, there comes a point where you can't roll your calls for credits. And if that was a thing, then obviously I don't want to roll them for debits. I don't want to increase my cost basis. And then you just take your profit, get it called away, and then reposition. So anyway, all sorts of ways to do it, man. But look, today, for a triple witching $5.6 trillion, up for grabs, it did come back and fill the gap today. So the 68% probability of not filling the gap was wrong. 32% probability of filling the gap was right. And it's not a huge surprise that we had, a really wild Monday that was kind of unexpected directionally. We had a holiday on Wednesday. We had one directional day Thursday, and the market basically, Frank, just finished flat for the week. There's not a lot of clear direction on the week. We're at 544 and change, and this does look like a potential evening star. If we have this longer wick to the north, the SPY looks like, we could have an evening star with a bearish decision. The Qs looks like we could have an evening star with a bearish decision, but we won't know that until next week, right? If we see that there's more directional moves next week into the end of the quarter, then that makes some sense. I mean, there's some inefficiencies there on that last weekly decision move that maybe the Qs come back a little bit, but here I am, like, does it go down? Maybe it does, maybe it doesn't. I'm going to trade it both ways. I'm really not trying to short. What's that?
What is an evening star?
Evening star? I was just going to make a joke, be like, who, Billie Eilish is? Just kidding. Anyway, an evening really star bad. It's a topping pattern. That's a terrible joke, I know. It's a topping pattern. So you have a decisional candle right here that'd be bullish. Okay. And then you have an indecision candle up here that shows that the bulls have stopped their run. And then you have like bullish decision. Bar? Yeah. And then you'd have a bearish decision here. So basically an evening star looks like this. If I paint this, let me try to get this colored in. So if you paint this green, okay, that's your bullish decision bar. And then you paint this one red, that would be your bearish decision bar. So that's what an evening star looks like, is you have decision, indecision, followed by decision. So that's an evening star, which is a topping pattern. And then you flip this around. If you wanted to look for a bottom, then you would do, here's your bearish decision. And then you have your bullish, oops, let me change the color. Then you have your large indecision. And then you'd have your bullish decision. Like that.
Okay, gotcha.
So that would be your, that's a morning star. So let me label these so everybody knows. So this would be evening star. Put this in black. So evening star and morning star. So these are just candlestick patterns that, in higher time frames, they matter. So when I see the SPY and the Qs this week are showing a bit more of an indecision, I'm wondering if there's a follow through to actually get a bearish decision. It doesn't have to be immediate. It's not always like, 1, 2, 3 candles, that's formation. If we trade with a little bit of indecision here, but we don't break the highs, there could be bullish decision, indecision, 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 and then a bearish decision. It's still the same pattern. But for technical drawing, this is what it is.
I've seen that on the SPY where it had indecision for like 3 days, where it closes at where it opened, looking just like that. But then it rips higher.
Sure. Well, I mean, it's not 100%, dude. I mean, I'm not looking at this like, that's why I'm selling. It's like, it's just a pattern. It's a potential. I still think you're right with, we have a bullish bias. There's nothing about the structure in these markets that are showing breaks, right? Are we vulnerable? Sure. If Nvidia sells off, it's going to drag the market lower. If Apple and Microsoft sell off, they're going to drag the market lower. But if we mute this move for a 1 to 2% dip, just like we've seen all year, maybe that's all the market needs. Or if this market just kind of, drips lower, let's say it just drips lower into the CPI gap, that might be enough there, Frank, to then really excite the bulls once again, because it's like, cool, we got a 3 to 4% dip, maybe. But 1 to 2% has been this. Like that was 1 to 2%. That's a bunch of 1 to 2%. Tiny, tiny, tiny little pullbacks.
Yeah,
So
not
tiny
very
little
big
patterns.
moves in the grand scheme of things, but
Nope. And
yeah, if
just
it does
melting up
pull
higher,
back
man.
too, if it comes back to that support or the
Yep.
trend line,
Yep.
you know, that's probably just another setup for
I
the
think so
upside.
too. And look, man, we're at the halfway point of the year. There's a lot more setups ahead, right?
Oh yeah,
So I mean, by the time you and I have this conversation towards Christmas, we can let's remember this. Let's remember June 21st, and we'll talk about, if Frank, all you did was just buy calls for the rest of the year, something tells me you'll be okay, right?
yeah. I
Look,
just
even
might.
worst case, yeah. I mean, if worst case scenario is you have defined risk on each one, right? You pay a couple dollars for a call option, you lose. Pay a couple dollars for a call option, you lose. The odds of you losing over and over again for the next 6 months probably very slim.
Yeah,
If the market's going to be higher, if every major investment bank and analyst out there is talking about, SPY going to 560, SPY going to 600 or 600 plus, dude, you're doing exactly what you need to do. Just focus on the upside, focus on the path of least resistance, define your risk, and guess what? You're probably going to be fine.
and
Like
it's going
trading
to
does
be
not have to be
cheaper
hard.
than for everyone, but it'll just be easier for me because if I do an iron condor, it's going to cost me way more than to buy like a $2 option play.
Hmm.
So I'm
Spot on.
just probably going to do that, and I don't think the market is going to see a crash this year just because we're at this election phase coming up in November.
Yeah.
It would just be I don't know. I don't think it's likely that that would happen, but yeah, I remember we talked about this a while ago.
Hmm.
Come 2025, we can start seeing a more downside risk.
For
For
sure.
now, it's just how far will it pull back before it rips higher?
Yeah.
Um, so that's just all I'm focused on right now.
So one trade. So couple thoughts. Well, I guess you're talking about like a couple dollars on a call option. One trade that I like to take if I want to just be bullish every week is it's a debit spread, but you essentially straddle price. So if I bought a 540, this is going out the next Friday. This is just an example. If I bought a 540 and I go equidistant, so we're trading at 545. If I buy a 540 and I space that out, so I'm $5 away from current price, and I sell a 550 call, 540 to 550 is bullish, right? Like it's a bullish debit spread. If price goes up and up and up, my 566 debit with the actual built-in value, because I have intrinsic value because I'm buying the 540 call, I could take this 565 debit and have this thing. If we drift up towards 550 again, this is going to be showing $8 or $9 of actual credit. So I know I'm paying for it up front, but this is a very easy way for a bullish week to see this pay out really nicely. And the
Yeah.
nice thing is if I'm wrong on this trade, you can actually flip this into a butterfly. So again, I'm going $10 out. If I were to sell a 530, right? I sell a 530 and I buy another 540. Now I switch this into a butterfly trade. Guess what? My butterfly gives me a chance to get out of the trade with a net position of maybe saving the trade. Does that make sense? So
Yeah.
there's a plan A that's bullish bias. If we're bullish on the week, you should be able to maintain that intrinsic value to the trade. And then you have but the butterfly is a plan B just to help you get out of the trade and mitigate it with that potential like lottery play built into it. So, but what would have to happen? We'd have to sell off 1% next week, and this trade is all of a sudden in jeopardy, right? If it stays where it is and we just drift at the lows and end up higher for the week, this trade gains every single week. So, it's costly, but you're doing it a little bit more where week to week you're getting like any type of drift upside. Like even if this was let me get rid of this trade here.
Well,
Uh,
I like that because if we have a week where it's just very low volatility,
you stay where you are. Like you maintain value in the trade. Does that make sense?
yeah,
Yeah, that's why I like it, because if price goes nowhere and we sit around 545 all next week, I'm going to be down about 60 cents. That's a very tolerable risk considering a call option that doesn't work out can go to zero. This trade, because I'm in the money, I'm getting that time premium. And if we just stay where we are, I maintain that time premium. I maintain that actual like intrinsic value, the actual real value of the option. And if it goes up a little bit, this actually pays. So this is also a very easy trade to do week to week without having to pay an arm and a leg for it. I mean, honestly, dude, it's Friday. We're talking about this next week. It's like this trade is freaking cheap. Kinda. It's already cheap. But it's because the IV it's been low. It's like the VIX is low. The IV ranks for the most part of the indexes are low. So Anyway,
But what is
crazy
it like
stuff,
on
dude.
the downside? How much more expensive would it be if you try to go?
So if I bought, let's say I bought the 550 put, and then I sold the 540 put, it's cheaper. Well, hang on, let me do this. Wait, that's cheaper. I buy the 549. It's cheaper. Interesting.
So puts are cheaper.
Well, they're a little bit cheaper, yeah. So we have some put skew when it's a little bit cheaper. I mean, you're definitely being asked to pay for most of the implied volatility. So with an implied volatility move around $6, I'm paying $5.60. It's right there. You know, I just look. I think right now, if we're going to keep the VIX within 10 to 15, I think you're better off buying options than you are selling options. If I'm selling options, which it works in any environment, but you got to be quicker with your profit targets. I think you got to take those 15 to 25% if you're selling. Or you're selling options to like sell puts and own the shares, or sell calls to cover your shares and protect yourself, lower your cost basis. I mean, I think just straight up selling options week to week or day to day, it depends on the strategy, but you're better off in a higher IV environment being an option seller because you can go out past that standard deviation and get a lot of credit for it. Right now, it's like they're making you, if you want a decent amount of credit, you're going on those verges of like, you're doing 25 and 30 deltas, and those are threatened a lot. Like the probability of touches, the probability of closing, in the money, obviously gets a little bit higher when you get into those higher deltas. So for me, as I sell and it's kind of delta specific, I'm looking at like 15, 20 deltas. If I do covered calls, I'm trying to, go to a 15, 20 delta out of the way because I want price to still appreciate. So anyway, but right now, like you said, if you're buying a put, it's actually a little bit cheaper to buy the put and play it that way. But even like I said, if I bought the call and then I make it equidistance, we're at 5, so I do 540, so I'll sell the 550. I mean, that's not bad, dude. If I paid 550 and this market drifts up to the highs again, this is going to be a $10 option by next week. If we went up to retest the highs, this is a $10 option that obviously I'm not going to make $10 on it. But if I turn this from a 548 debit into a $10 credit, you can see here my max loss is exactly what I'm paying for it. But the upside of, if we test the highs, I get pretty much, I mean, it's a 70 delta roughly. So I'm not getting dollar for dollar. I'm not getting the full move. But if it goes up, $5, I'm getting 70% of that every single day. And by the end of the week, it's going to be pretty much 100 delta. It'll be like 95 to 100 delta or close to it.
Yeah.
So it's a simple way to trade. Like I said, you like your 1 or 2 days out. I like this one where I can go a week out and it's not that expensive. If the market stays where it is, I have that value built into it. If it goes up a little bit, I'm getting, again, hit my profit targets, 15 to 25%, take it, be done with it, move on.
You're right.
Not bad.
Yeah, as a simple call or put option would expire or lose value over time, you're set up with the sell call as well. So if price drifts, you're doing fine.
Yep.
But yeah, Chris, I think I'm going to get off. I'm kind of tired.
You're tired, dude. I got home last night. I got home at 1 a.m. last night, dude. But I gotta send you and Drew and James the picture. I got this fancy club set that I'm working with. I'm building the club set right now for this guy that's picking it up tomorrow, and they're pretty sick. So I'll send you guys a picture. I had to take them all apart and put them back together. So that'll be the final project, but it's been chipping away at it each week. So I got to go too. I got to jump into my other trading room. But as always, happy Friday, man. Nice to be with you. Thanks for hanging out today. And happy Friday, everybody.
Yeah, happy Friday. Thank you, Chris. And yeah, I'll talk to you Monday for sure.
All right, sounds good. Have a good weekend, everybody. See you soon.